on another matter that is happening in Washington is the debt ceiling, right? As it stands now, the government is set to reach this debt limit as early as mid-November, even December. Lawmakers, they have no plan on how to raise the debt ceiling. So, Phil, are we really at this again?
Betty, yes, we are. And look, we're talking about mid-November here. And as we lurch from crisis to crisis in Washington, D.C., as we have for the last couple of years here, maybe looking to mid-November is a dangerous proposition in and of itself. They still need to figure out a way to fund the government past October 1st. But I was talking to a couple of leadership Capitol Hill aides over the last couple of weeks about this, and they're looking ahead and they see serious problems. And the reason why is this. The White House has said once again that it absolutely will not negotiate over an increase of the debt ceiling. It won't consider spending cuts or anything like that. They want the increase of the debt ceiling to be standalone and have no attachments to it. Republicans now control the Senate, which they never did as we were going through these debates over the last couple of years, and the House. Plus, a key component here, 3 Republican senators are running for president, Betty. So when this comes up, this is going to be about a month and a half before the Iowa caucuses. You can bet Rand Paul, Ted Cruz, Marco Rubio, all are going to make this an issue on the campaign trail. All that does is put Republicans who need to control the House and Senate in a very politically difficult position as they try and figure out a way to increase the debt ceiling, something market participants say is an absolute necessity for the U.S. economy.
Right, and those 3 could have a big impact. But look, this is likely to have a big market impact, too. And I know you've got some data on this. So how exactly could this impact the markets?
I think the big question, Betty, as we've gone through this the last 3 years, is no one's really been able to quantify, okay, what's the impact, not just of failing to increase the debt, to raise the debt ceiling, but just of the gridlock in the debate itself. Now, the Government Accountability Office just released 2 lawmakers circulated on Capitol Hill a 74-page report looking back at the 2013 impasse. Betty, there are real impacts here. More than $70 million were lost for the U.S. due to increased borrowing costs during this period. You also had a market-based systematic avoidance of certain Treasury securities that were maturing around the time the debt ceiling was supposed to be reached. Dramatic increase in rate. There's a halt to accepting Treasury securities as collateral. The GAO, Betty, interviewed over 20 market participants to make this report happen. They're talking banks, clearing banks, mutual funds, credit rating agencies. So this is an excellent report looking at the real live market impact. Betty, not only did they have major problems back in 2013, but every one of the market participants interviewed by the GAO said that when we get to this debate again, they will once again take the same measures when it comes to strategy. All that's going to do is cost the U.S. government more money, and that's not even considering the possibility of going over that cliff. That's just leading up to it, Betty. So a lot of problems caused by this, a lot of issues for lawmakers to consider as they go into this debate over the next couple months.
Okay.